So, GoGold, I'll just talk a little bit about the track record of management in GoGold. We've been a Canadian company, but we're Mexican focused. I've been working in Mexico for 21 years. These are all the projects I've been involved in as CEO. First being Gamma Gold. We had the Ocampo asset back in, bought it from a private company in 1999 for $15 million. Developed essentially two mines on that property. And at the top of the market in the 2000s, it was about $2.2 billion market cap. 3 years ago, the asset, after producing over 1 million ounces, was sold to Carlos Slim for $750 million. Mex Gold, another one that we acquired in Mexico, again from a private family for $20 million. We had a shell. We did $45 million financing out of the gate and sold for $375 million. Today, it's the main asset, or one of the main assets of Endeavour Silver. Nayarit Gold, that's one I just took a big position in and took it through a feasibility study. Sold to Capital Gold in 2010. And the latest is GoGold. I've been CEO for 18 months now, one of the founders of the company. We have one operating mine, and we had a development property that we bought in 2014 for $9 million, half cash, half shares. And that project, last November, we sold it for $80 million to Agnico Eagle cash, plus a royalty that we valued about at $15 million today. So outstanding today, we have 171 million shares. You see some options and warrants there. They're out of the money. They're about $1.20 average and about a year left on those. So cash position today, we have $14 million US and about 30% insider ownership in the company, and I'd be personally one of the larger shareholders at about 14.7 million shares. Here's the projects I just mentioned. Sandra Gratuitous, where we retain a 2% net profit royalty. Agnico bought that for $80 million cash last November from us. So we, with the royalty and the cash, essentially we made $75 million US gain on that in 3 years. They're going to drill it aggressively over the next 2 years. So we think the value of that royalty will increase. Parral is our operating mine, and I'll move on to that. So the Parral project is a large tailings retreatment project, and that's one of the reasons we're over here in Cape Town. On our side of the Atlantic, there's not a lot of tailings retreatment, but of course here in South Africa there is. So we came over here to hopefully meet some new shareholders who are interested in that business. And that will be a big part of our business going forward. The Parral project, our partner is the municipality, where we pay them $50,000 a month. We remove these tailings from the city of Parral. And these tailings are very old tailings, some of them 300 years old. They're good grade at 0.31 gold and 40 grams silver. So we move them out of the city 14 kilometers away to our newly constructed agglomerated heap leach. So we contract mine, 40-ton highway trucks. We haul them down the highway 14 kilometers on a 4-lane freeway. We agglomerate with cement the tailings, and we put them out on a heap, and we leach with sodium cyanide. Because it's high silver, we extract with a Merle-Crowe process at the end of the process and produce doré bars. There's the current heap leach as it stands. And it's fully permit for expansions for the whole mine life. We do have a 10-year mine life on this project remaining. And there's a lot of upside in the district. The Parral district was one of the larger world silver districts, and it operated for over 300 years. For example, 30 kilometers away, there's the Santa Barbara district, where there's more than 20 million tons, and some of that material has been drilled, and it's very high grade. Gold and silver. Talk a little bit about the project and the startup. I mentioned that we, I believe anyway, we're one of the first companies to reprocess tailings with an agglomerated heap leach. And why did we do that? We looked at the grade of these and we said, wow, that'd be a really good heap leach grade. Could it work in a heap leach? because a heap leach, of course, the capex per ton of ore is a lot lower and the OPEX is very low. We're currently producing for about $10 cash cost per equivalent silver ounce and about $12 all-in cost. Now, being one of the first, not only was it cutting edge, it ended up being a little bit bleeding edge on the startup. We did the feasibility study with an engineering firm, and a lot of the testing just didn't scale up in the field as per a typical heap leach. So really about a year ago we had to just reboot. What I mean by that, in the field we said, we're following the protocol as per feasibility study, and the leaching was just going very, very slow. So we made a few changes, and we just really trial and error over a year. And we slowed down the operation. We stopped just pushing tons. We started pushing recoverable ounces. And what I mean by that, we had been stacking about 7,000 tons a day, building up a big inventory in the heap, but it was coming out slow. So we said, let's try a few things. We went with a lower lift height versus the feasibility study. Went down from 10 meters to 5 meters. We changed the way we were leaching it. For the first month of leaching, we hit it very hard with cyanide. There's a little bit of soluble copper. So that drove that soluble copper out, and then the silver would start leaching. We put in a SART plant to recover that copper and also to regenerate the cyanide. And also we added a lot more cement, and that was a real trick here. We have to build a really good pellet that we put out in this heap leach. And the final change is we allowed it to cure once we put it out in the pad for a month before we started leaching. And all those things really turned out very well. If you look at the current graph of recovery against time, on the bottom, the green curve is the feasibility material that we put out there. And we've just blended together the first 8 cells that we put out, about 2.5 million tons of material. And you can see it's a very slow curve. That curve goes out for about 14 months, but some of that material goes out 36 months. And at the end of 36 months, we did recover approximately what we were supposed to recover. But then we gradually started to change the lift height. We do a pad and try that, and then we put in more cement, different regime of how we leach it with cyanide. And the final thing, the curves at the top there, the orange curve, is our latest pad where we actually let it cure for a month, and then we hit it with the cyanide. And the metal really just jumped right out of it. So with all those changes and that perfection of the protocol for leaching, we have actually got back to the curves that we initially should have had compared to the feasibility study. So what's it mean for GoGold? It means that we've developed a real expertise in doing these. In Mexico, there's hundreds of millions of tons of tailings that haven't been touched, have never been reprocessed, and they're very old tailings. So that's one business. We have a track record of finding in situ properties, usually with private families, and developing into mines and creating tens of millions to hundreds of millions of dollars of value doing that. Most recently, the Santa Gratuitous property, which is sold to Nico. And really, our balance sheet, no debt, $14 million. And right now, we're generating cash flow. At the operation right now, we're spending about $1.5 million a month. We're bringing in anywhere from $2.2 to $2.4 million a month. So, and that should grow by the end of this year with a new stacker that we acquired in December. We picked up the stacking rate. We should be up to about 2.2 to 2.5 million ounces run rate by the end of the year. And we would generate somewhere between $1 million and $1.3 million of free cash flow a month, US. So for a market cap of $47 million, it's a pretty low value on the stock today, and that's really the opportunity. So thank you.